What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about what I'm going to do to attack my investment portfolio towards the end of the year 2024. So, currently, I liquidated my entire investment portfolio and got into masterminds, learning, investing in real estate, um, just using a lot of that investment portfolio and just my salary to just have a cash account, a margin account, but cash in my account for options trading. So towards the end of this year, I'm going to refocus not just on options, but also on investing. So as you know, I currently trade options. I go long calls and puts. So that basically just means I buy calls, which means I'm betting that the stock's going to go up, or I buy puts, betting the stock is going to go down. I personally like to buy puts, betting that stocks are going down because I am pretty good at spotting reversals and doing the fade. Anyways, the way that I'm going to attack my portfolio towards the end of the year is going to be based on everything that I've learned in terms of investing and trading. Okay. So again, investing is typically holding on to a stock for a year or more. All right. And you get a lot of tax benefits this way as well. So what am I going to do and what have I learned in terms of investing? So the number one thing that I'm going to do is I'm going to focus on quality stocks. Focus on quality stocks. So what kind of stocks is that? Well, typically it's large cap stocks. So stocks with a market cap of 10 billion or more, a market capitalization, which basically just means how much the company is worth. So a market capitalization of 10 billion or more. So large caps and mega cap stocks and blue chip stocks. So these are stocks that everyone kind of knows, household stocks that do well, like Amazon, Google, even the stocks that are currently in play, like Nvidia, um, and just the list goes on and on. But I'm going to focus on these stocks. But the thing is, when you start to invest, a lot of people are like, well, where do I start? Do I just buy it? The thing that you really, really want to do, and the thing that you want to understand when getting quality stocks is the time that you pick it up is very crucial. So if you understand technical analysis, you can look at the chart, and what you need to look at is the 200 MA, the 200 moving average. And this is a line on the chart that gives you the average price over the last 200 days. And typically it's far below what the stock price is trading at. So the stock might be trading at like $200 and the 200 MA is like at 120. So what you want to do is to get the best price, you always want to wait for the stock to come down to the 200 exponential moving average, the 200 EMA. When the stock hits the 200 EMA and is in an uptrend overall, then that is a really good time to pick up that stock. And that's just a rule of thumb. This is straight gas that I'm spitting right now. A lot of people just buy stocks whenever. If you're thinking about picking up a stock, make sure you're getting a quality stock. Make sure that stock is in an overall uptrend. If you see a stock falling from the sky and it's like going to from $500 to $50 and then to $10, and you're like, oh, this is the lowest it's gonna go, you're cooked. Okay, you're cooked. A lot of people do that and ask me on TikTok, like, oh, this stock used to be $400, now it's like 50 cents. I think it's a steal. I think it's cooked. I think it's cooked. Okay, so you want to wait for the stock to hit that 200 moving average, but you want to make sure that overall that stock is trending upward. Okay, you want to look on the chart, scroll out, zoom out, and see overall from left to right on my screen, is this stock moving up or is it moving down? If it's moving down, most likely it's going to continue down. X that stock off from your list immediately. Immediately. Okay. Look at the market cap. Is the volume over 10 billion? Look at the volume. Is the volume over 1 million? You want a stock that is somewhat liquid to the sense that when you're selling, you have someone who will purchase it from you. Okay. A stock that's more highly traded. Okay. Another thing that I'm going to start looking at is I'm going to start looking at and continue to look at stocks that are in play. So, what are stocks that are in play? So, these are hot stocks that are popping in terms of the stock market at the time. So, this year, 2024, it was all about the AI craze. So chips, chip stocks, tech stocks, and the whole AI ordeal with Nvidia, ARM, and we even had a lot of these crypto plays that were in play as well. Coin, MSTR, these stocks are flying. And then in terms of chips too, we had SMCI as well. So I'm going to be paying attention closely to these stocks that are in play, that have new things in the works. And again, I'm going to be looking to pick them up around the 200 moving average. Now, if you did pick stocks up already, and if I do pick up stocks that I like, and I think they're at low levels, but they're not at the 200 exponential moving average, I'll pick them up and I'll let them ride the wave up. And then as we come down on massive pullbacks, just meaning that the stock price falls a lot. If it falls a lot, what I'm going to do is called DCA, dollar cost average. So if I buy a stock at 200, let's say I get one share at 200, and then it falls to 100, the price falls to 100, well, I'm going to buy another one at 100. So I'm going to buy one at 200, one share at 200, and another share at 100. So now I have two shares with an average price of 150. Okay, so whenever your stock falls dramatically, you want a dollar cost average. So that's what I'll be doing. I'll be dollar cost averaging on massive pullbacks. On massive pullbacks. One of the last things that I'm going to do in my portfolio as well, second to last thing, is going to be I'm going to diversify my portfolio. Okay, I'm not going to have all my money in Nvidia, and if Nvidia crashes, my whole thing goes down. Okay, no, we want to diversify. Have some of my stocks in the tech sector, AI sector, have some in the banks, have some in airlines, like all that stuff, oil, futures. I'm going to diversify my portfolio, and that's going to keep your portfolio afloat and keep it afloat. If one thing goes down, well, you're not crushed, you're not devastated. Okay, that's just one piece of your portfolio. Diversify your portfolio. And this brings me to my last portion of how I am going to absolutely destroy investing. Okay, towards the end of the year, I'm going to invest in ETFs. You might be like, what the heck? What is an ETF? An ETF is an exchange traded fund. And basically, it's an already mixed pool of stocks. For instance, the S&P 500. The S&P 500 is a pool of the biggest 500, the largest 500 companies in the US. Putting your money into something like that is really crucial. It's already diversified. And the S&P 500 returns on average yearly 11%, which is great, which is really good. Not only that, but there's other ETFs like QQQ, and then a ton of other names that I'm not going to mention, but I will be mentioning them later this year. But investing in ETFs is a really easy way to make passive income because it pulls the stocks already for you in that one stock. Okay, so investing in ETFs is going to change the game. Another thing, last but not least, that you want to do is you want to get really good at your technical and your fundamental analysis. So my technical analysis is pretty on point right now. So now I'm just going to pretty much up my fundamentals. So I want to know the company's finances. I want to know how they're doing. I want to tap into what their executive board is doing, their CEO, and just kind of learn more about the company overall before I invest in that company. Okay, so that's going to be another area to grow in is my fundamental analysis in order to make good forward projections about a company. So, with all that being said, towards the end of 2024, we're going to be going in with a ton of huge investments, really building up my investment portfolio again, back from scratch with this now new mind of learning for years how investing, how trading works, and now applying it in real time. So stay tuned. We're going to start an investing portfolio, and that's how we're going to do it. Diversify it. We're going to invest in ETFs. We're going to pick up stocks at the 200 MA. We're going to dollar cost average. We're going to leverage in terms of getting large cap stocks. We're going to get large cap stocks, market caps over 10 billion, blue chip stocks, mega cap stocks, stocks that are in play, and we're going to absolutely tear up the market. So, any questions, drop them in the comments. But that's what we're going to be doing with our investment portfolio, and that's what you should be doing with your investment portfolio if you haven't already. Hope you guys enjoyed this video. I'll see you on the flip side. Have a great day.